On February 4th, 2026, just hours ago, the Vice President of the United States stood before representatives from over 50 nations at the State Department and uttered 5 words that could reshape the silver market forever. "We will establish price floors. Not we might, not we're considering," he said will. J.D. Vance looked straight at those delegates and declared that the U.S. is guaranteeing minimum prices for critical minerals, and as of November 2025, silver is officially classified in that elite group. Your silver, the bars tucked away in your safe, the holdings in your IRA, the tube of Eagles you scooped up 3 years ago when everyone called you a conspiracy theorist? The Vice President just signaled to the world that the government wants that metal to be worth more, not less. More. And the tool he's wielding? Adjustable tariffs. If China or any other player tries to dump cheap silver to tank the market and crush your investment, the U.S. will hit them with tariffs to enforce that floor price. This isn't hearsay. This isn't a leaked memo or a social media rumor. This happened today, on camera, in front of the global stage at the State Department. And by the end of this video, I'll break down exactly what this means for your physical silver stash, what it does to the paper market, how it crushes the short sellers, and whether $1,000 silver is a pipe dream or an inevitable reality waiting to unfold. But first, I need to show you the cracks in the system that convinced me this announcement was inevitable. Something so fundamentally broken that it's a miracle the entire silver market hasn't imploded already. Welcome to the hidden economy. If you're new here, smash that like button and subscribe right now. The algorithm suppresses content like this unless you engage early and hard. This is the kind of intel Wall Street prays doesn't go viral. And if you caught my last breakdown on the Epstein email and its path to $10,000 gold, hold tight. What I'm about to reveal about silver is the flip side of that same explosive coin. Literally. Let's start with Vance's exact words, because precision matters in a game this high stakes. Direct quote from today's ministerial meeting: "These reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity." He went on, "We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers, because we know, of course, that as soon as they have undercut our domestic makers, they leave the market, and the people who undercut them then jack up the price to a completely unfair level." Pause and reread that. The Vice President of the United States just outlined, on a global platform, a tariff-based weapon to block anyone from selling critical minerals below a set threshold. That's a government-enforced price floor, plain and simple. And he didn't stop there. He proposed a full trading bloc among U.S. allies and partners, one that secures American industrial access while ramping up production across the alliance. Secretary of the Interior Doug Burgum confirmed 30 countries have already signaled interest in joining. This isn't a junior aide's tweet. This is the second highest official in America telling 50 nations that the U.S. is forging an economic fortress to dictate the prices of metals powering the modern era, and silver is locked in as a key asset. Now, here's the twist that makes this even more explosive. Just last week, the media spun the opposite narrative. On January 30th, Reuters blasted a headline claiming the Trump administration was ditching individual company price floors. Australian mining shares tanked, silver holders freaked out, and the story became price floors or DOA. Wrong. Dead wrong. What got scrapped was a clunky one-off approach. Bespoke deals with single companies dragged out, costly, ripe for political blowback. That model was never scalable. What Vance unveiled today? A systemic powerhouse. Tariffs deployed across an entire trading bloc. If silver dips below the reference price, tariffs auto-activate to jack up import costs back to the floor. No need for endless congressional budgets, no per-company haggling. The president already wields this power under Section 232, which Trump invoked on January 14th, labeling critical mineral imports a national security threat. So the media crowed price floors dead, and today a vastly superior block-wide version rose from the ashes. The market hasn't digested this yet. When it does, the fallout could be legendary. But to grasp the full impact, you need to understand why the government is pulling this trigger now. The answer reveals the trajectory, and it's not pretty. On November 7th, 2025, the U.S. enid silver worldwide, and they just throttled it. State media framed it as elevating silver to strategic resource status, echoing the rhetoric before rare earth export bans. Identical playbook, new metal. Elon Musk weighed in, this is not good. Silver is needed in many industrial processes. But connect the dots, Vance's 30-country bloc is a direct counterpunch. Silver's top producers, Mexico, world's first, Peru second, Chile, Australia, Poland, U.S. allies all. If they enlist, as Burgum hints 30 nations are eyeing, the bloc corrals most mined silver under a price floor umbrella. Outsiders like China, tariff walls. China chokes refined exports, America fortifies raw supply chains. Not trade war, economic encirclement. Both superpowers vying for control, zero retreat. Enter Project Vault, launched February 2nd, 2 days pre-Vance. This demands scrutiny, mainstream glosses over it. A $12 billion critical minerals stockpile, $10 billion Exim Bank loan, largest ever, 15-year term, plus $1.67 billion oversubscribed private capital. Players: GM, Boeing, Stellantis, Corning, GE, Vernova, Google. Logistics: Hartree Partners, Traxys, Mercuria. Why Google in a metals hoard? Not cars or jets. Data centers. AI servers slurp triple the silver of legacy ones. Google's hedging against shortages, crippling AI expansion. Tech titans stockpiling with defense giants, signals unpriced peril. Structure: participants lock in minerals at fixed prices, embedded floors, not paper bets, physical metal, government-backed, shielding against spikes or Chinese cuts, built in weeks, economic armor. Silver's 12-month ride underscores the frenzy. $31 in January 2025 to $120 peak in 2026, a near 4 times surge. Then, January 30, first's 27% nosedive, worst since Hunt Brothers' 1980 debacle, yet it rebounded to $90 in 4 days. 190% annual return post-crash. What asset rebounds like that? One indispensable to civilization. Banks clash on futures. City Eyes $150 in 3 months. Goldman 85 to 100 average. JP Morgan's Kolanovich screams mania, targeting $50. Bofa crowns silver first bubble risk. Above stocks, crypto, everything. My take, both camps half right. The $120 hype was frothy, leverage amplified the crash. Blind bulls claiming up only peddle fiction. But deficits are ironclad. China's curbs, fact. Critical status, fact. Section 232 threat, fact. Project Vault, fact. Vance's floors, fact, fresh as 3 hours ago. Policy doesn't crater 27%, it endures. $1,000 silver. Honesty over hype at $90 now, that's 11 times. Gold-silver ratio at 5. 1. Unprecedented. Not next week. But 12 months back, $31 to $120 seemed lunatic. Government moves then? Delusional. Yet here we are. What unlocks $1,000? Gold at $10,000, Yardini forecasts it. Ratio compressing to 10, 1, historical norm. Or currency debasement. Central banks' gold binge prices that in. 1980s $50 peak. Inflation adjusted, $150 to $1,400. Ted Butler's range. At $90, silver's undervalued amid money printing. Not 2026, but this decade, 300 to 500 feasible as deficits widen, ratios shrink. From there, $1,000 looms. Crucially, floors transform silver's DNA. Pre-today, boundless downside. China dumps shorts hammer, Fed hawks tank at 30% overnight. Felt that last week. Post-today, structural backstop. Dips trigger tariffs. Dumps get absorbed. Mind struggle, minimums guaranteed. Volatility lingers, crashes possible. But the mightiest government caps your lore. Downside, policy protected. Upside, physics driven. Solar, AI, EVs, missiles irreplaceable. Silver's golden era. Now, that 1996 blackout, DoD and 4 agencies halt military silver reporting. Silver Institute's reports omit defense. Missiles, satellites, radar, subs, F-35s. Hole bigger than the U.S. military, 820 million ounce deficit, excludes DoD entirely. U.S. fired 2,300 plus Tomahawks since 91, each 15 to 500 ounces silver, vaporized. Radar, comms, electronics, all uncounted. Real shortfall? Catastrophically larger. Same government hiding data now deems silver critical and imposes floors. They know we're blind, connected. Bottom line, 5-year deficit, fact. China's choke, fact. Critical designation, fact. Section 230, 2, fact. Project Vault, fact. Vance's block, floors, fact today. Shorts versus government, fact. Military black hole, fact. All arrow upward. $1,000 guaranteed? No. Possible? Absolutely. Direction? Clearest in decades. Governments don't stockpile declining assets. Don't block for overvalued commodities. Don't secure surpluses. To skeptics, call it hype, bubble, JP Morgan's $50. Short term? Maybe. Leverage kills. No house mortgaging advice here. But counter. Why $12 billion stockpile if hype? Why floors to 50 nations? Why China's rare earth rerun? Why Google, Boeing, GM hoarding? Bubbles don't earn security tags, don't spawn blocks, don't ignite stockpiles. Silver's no bubble, it's a superpower battlefield. Next video, behind doors floor levels. Vance teased references. I'll unpack MP materials. USA rare earth deals for silver clues. Eye-opening for holders. Subscribe, don't miss. Comment silver floor. $100, $200, higher, I read all. Share this breaking news, hours old. Mainstream lags, market won't. That's the hidden economy.